probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right. The big question for today is, did Mark Douglas lie about having an edge? Well, today we're going to basically dive into some of the myths around that concept of having an edge or not having an edge. And the last of the myths we'll be talking about today, we're going to basically blow your mind because sometimes traders still don't trust themselves, even if they've memorized all their rules. So the question we have today, Mike, is, you know, you've read Trading in the Zone, right?
Yes, I have.
Okay. Have you read Disciplined Trader?
That one, no, I haven't read that one.
That's really an excellent book. And so what was the impact? You read Trading in the Zone. So So I put this thesis out there, this statement, did Mark Douglas, I asked the question, did Mark Douglas lie about having an edge?
Yeah, that kind of freaked me out a little bit when I saw that one. Geez, my whole trading life has been based on a lie.
So, well, hopefully you didn't go out there burning books or anything like that. But
yeah, we're making s'mores.
But a lot of people, especially on social media, on X, on Instagram, on LinkedIn, in various areas, they basically talk about having an edge. And they reference and tie back to Mark Douglas a little bit. I mean, I think they may be hitching their promotion to what Mark Douglas has done with the quote unquote edge or trading in the zone. People have really gotten into that one. But, how do you think Mark Douglas's, his message has been misused by traders out there? Because remember, Mark Douglas said, you have to learn how to think like a consistently successful trader. This means learning to truly accept risk. But how do you think people out there are just basically missing the boat on interpreting what an edge really is?
I think that when it comes to trading psychology, trading mindset, people dive into mindset as being the reason why something might not be working. And it almost becomes like a scapegoat, like, aha, there's this intangible thing that if I could just sit here and believe in what I'm doing, then all of a sudden results are going to show up. And unfortunately, that's not the case. The reason why is because if you don't have some sort of a system that actually works, right? Like take mindset and take psychology and philosophy and all the other fees out of the equation for a moment and just let's look at something mechanically. Like, does this actually work? Right?
Okay.
Like if it's a car, like, does it actually move? Yes or no? If it does, then perhaps it is something psychological behind it, right? Like the driver might, does the driver hit a tree or no? Well, if the car doesn't move, then maybe it's not the driver, right? So does the system that you have, does that thing actually work?
Yeah.
A lot of people, when they approach trading, they think that they've cooked up some sort of a system, and it's something where maybe they just had a hunch about an idea, maybe that they've listened to a couple of YouTube videos or follow some people online, and they have this Frankenstein of an edge where, well, I'm following 10 people on X. And I take what those people say, and I try to see, well, this person is saying one thing, this one's saying something else. If I combine these two, then I've got something even better than what each one of them have said. And I'll trade that. it's not really it's not really an edge. What Douglas
Mm,
is talking more about is something that has been proven. Where if you test this thing and over 1,000 trades, you know without a shadow of a doubt you're coming out with more money in your pocket than you did beforehand. That's
yeah,
an edge. That's what the Vegas casinos have. They have an edge. They don't care how many people walk through the door. They know that they're making money at the end of it. That's
yeah,
what we want to get at. And
yeah.
that's where some people, unfortunately, they miss out on that part. They think that it's just, like kind of sitting there with your eyes closed and, believing real hard. It's more than that. Yeah.
Yeah, no, I love that. Part of the deal is also, I think that people give, and I don't mean to be, I don't mean to be critical. I'm not going to be critical, but I'm just going to state what I see as what I believe are facts about the situation. Is that some people, they give lip service. They've heard
Mhm.
about this thing called an edge. They've heard about this
Mhm.
thing, trading in the zone. Um,
Right, right.
and so they're basing their understanding on basically just their beliefs that aren't founded in fact. And in other words, they haven't really picked up this book and actually
Mhm.
read through it, made notes
Right.
on it. They haven't, looked at the because there's some really great questions and little workbook in the Trading in the Zone book that Mark Douglas wrote. And oh, by the way, there will be links to Mark Douglas's. If you want to get a copy of that, there'll be links down in the description in the YouTube channel. Now the advertisement is over. No,
Hmm.
so so basically, it's like you know they want what used to be called the Reader's Digest version of understanding, which is basically just a
Mhm.
condensed amount of truth, if you will. It may hit the high points, but it doesn't get into th- the actual work. Um,
Mhm.
Developing an edge is more than reading a book, more than concentrating on how you think. It's something I think that a person develops. You grow
Right.
into your edge based on some hard work. I mean, some back testing showing that your system's going to work, and you get to the level. For me, at least, get the edge that I help people get to is the edge of trusting themselves and trusting their system.
Right,
And
right.
you know what I'm saying? And then that in turn, if they're doing that, they know how their system's going to perform. And if they've used their system with discipline, then the rest of what that happens is that then they can start trusting themselves. I know what
Mhm.
I'm going to do. Like
Okay.
I earlier today, I was looking at, and I only trade during the final hour of the day, right?
Right.
But earlier today, I was looking at this entity. I love trading the leverage ETFs and MicroStrategy's leverage ETF, MTSU or something like that. Here, let me see. No, um, you guys can drop the ticker in your chat if you know what the leverage ETF for MicroStrategy is. However, but when I took a look at it on the chart first thing this morning, I was going, that's a really nice potential pattern, you know,
Mhm.
bullish engulfing pattern, breaking a bull flag. And I'm going, oh, if this continues on through the end of the day, I want to be on board. I want to
Mhm.
buy some of this. So did I jump right on the trade right, first thing this morning and buy it? No, because my edge comes in trading at the end of the day. So here's what I
Right,
did is I built my position size. I
right.
defined the area. I want the price action at 15 minutes before the close today. I want it to be above the 8-day moving average, but not above the high for the day,
Mhm.
as of right now. So in that little bitty range, there's a little zone there. That's my buy zone.
Mhm.
And so I put in my order and it will trigger at 15 minutes before the end of the day. And if my parameters are met, which is what my edge is, defining the parameters well,
Right.
part of what my edge is, then I'll get filled in MicroStrategy's leverage ETF, and that's all well and good.
Mhm.
However, I've mechanically designed it so that if it drops below the 8-day moving average, I won't get filled. Or if it's above, let's say at the end of the day, it runs above its current, high for the day, I won't get filled. And
Okay.
that's okay because it's outside my edge. And so I share that story with you is because
Mhm.
I share that story with everybody because that's, I think, what it means to put action to your edge. You know,
Okay.
yeah, go ahead. You
Yeah,
look like you
yeah.
have a
So,
question.
what do you say to the person that's like, yeah, that sounds great, but I don't really have time to develop my own edge. You're somebody that's been trading for a long time, and you've built this edge. I'm trying to work, and I'm just listening to this, maybe even later on, right? So.
Sure.
What's wrong with me just borrowing somebody else's edge and having the mindset part where it's just like, okay, now I believe that Dennis knows what he's doing, so I'm just going to follow whatever he does, and that'll be it. Is that good?
That's a great question. That is a really great question because you can learn to some extent by copying somebody. I mean,
Hmm.
yeah, that's a great way. That's a great way to learn. But at some point, you have to develop. If it's adopting somebody else's what they're doing, you still have to do something to make it your own.
Hmm.
Now, because, clearly, I put out my trades every week into our premium members,
Right.
and I show them exactly what I'm going to be doing, and they can trade along with me, do
Hmm.
paper trades along with me, and all that kind of stuff, mimic my trades, and that's great. But what really does my heart good is when they take my system and start applying it to other stocks and ETFs that I'm looking not, that I'm not watching and they
Hmm.
make that work. We've got one guy, Jake. He's a doctor, um, and he basically is busy. I mean, he
Hmm.
is busy all the time, and he squeezes out like 2 or 3 days a week. He can squeeze out like 20 or 30 minutes,
Hmm.
and that gives him enough time to check, the entities that he wants to check, and
Hmm.
then put in the orders that he needs to put in,
Hmm.
and he basically has designed how he operates the system to actually match his schedule. And so that solves he basically has said, okay, this is what I need to do in order to utilize the edge that's defined by the autopilot trading service. And
Hmm.
and so and so that's a perfect example of how he has made the edge his own. And now he's out there, he's out there doing it by himself. I mean, he's exploring and making things happen, make little tweaks to it, and he has a big smile on his face because um, he basically is consistently having winning trades.
Hmm.
So I hope I answered your question.
Yeah. 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 Good job.
And so the edge is a system. This is myth number one. What? The edge is a system. And so with this, traders over focus on tools, not on behavior. Douglas talked about the edge as being a probable, this is a big word, guys, big word, probabilistic advantage, not a predictive signal. So, you know, what happens when your system or your setups fail 3 times in a row? Mike? I mean,
Mhm.
I know this has never happened to you because you always pick really, really good setups, and you've never had 3 setups fail 3 times in a row, right?
Oh, that's not true. That's happened plenty. That's a normal occurrence, and
Yeah,
it's not a bad thing, right? So uh, when
I'll be
your
right back.
setup doesn't work, what was that?
Go ahead.
Yeah. So when your setup doesn't work, uh, that it's a normal occurrence. The way that I look at trading is that I want to be right about half the time. So if I'm flipping a coin, it's possible to get 3 tails in a row. It's possible to get 5 tails in a row.
Sure.
That doesn't mean that the coin is broken. That just means that we might need to adjust our betting on these coin flips. So
Yeah.
what I do, well, when I get 3 losses in a row, is I start to scale down. I start to
Okay.
scale down on my position size. The reason why is because something that I've observed from having traded markets for a long time is that my winners tend to come in bunches and my losers tend to come in bunches as well. So if I start to see that, oh well, I've got 3 losses in a row, that might be a sign that the market is shifting. And
Right.
if the market's shifting, then that doesn't mean that I shouldn't continue to test the waters, because one of the ways that I keep my finger on the pulse of the market is by executing uh, these high probability, high reward, low risk trades.
Yeah.
So if it starts to shift where, okay, this one's a loser, that one's a loser, that one's a loser, that doesn't mean systems failed. It means drop your position size, because
Right.
this could be a shift where now you're going through a drawdown. Great. So if I take my bet size from risking 1% down to 0.5%, then I'm able to keep on trading until the market starts its upswing. And then when the market does start its upswing and I start to see, oh, well, now I've had 3 winners in a row. Awesome. Now I could go back up in size. And then if I get
Right
another
on.
3 winners in a row, then I can up my size again. That way I'm trading my biggest when I'm trading my best, and I'm trading my smallest when I'm trading my worst.
Yeah.
That
And
makes
so
sense.
and no, that makes absolute sense, and it hits right on Mark Douglas. What he was saying was he was talking about the probabilities. You know,
Mhm,
understanding your probabilities, and I
mhm,
think that's one of the reasons why people get hung up in this thing about the edge and trading the zone, is because it he does talk about understand the probabilities. But the
mhm.
thing that's interesting, he doesn't get into the, figuring out the exact probabilities. I have a 78.99% probability this trade is going to be successful. He doesn't get into that. He basically just gets into the recognition of, one, what kind of setup tends to give you a higher probability of success. And so a higher probability of
Okay.
success oftentimes is defined as, you know, 55, 50 to 55 to 60% chance that it's going to be a successful trade. And that's enough. And that is the edge that's been defined by how you've established your system.
Mhm.
And so, um, it, so the question comes also back around is, if you removed all the indicators on your chart, because a lot of people, put their faith in the indicator, right?
Mhm.
Um, and they almost think, okay, this is my holy grail of trading because I'm using XYZ indicator and it always does blah 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 blah. But if you removed all the indicators from your charts, would your discipline survive, and how would you trade?
Yeah, that's an interesting question. I don't know.
Okay.
If I removed all the indicators from it, right? So a part of the analysis comes from having said indicators, then it's a different system.
Yeah. So,
I don't know.
well,
How do you answer that question?
I answer that question. Matter of fact, I firmly believe that at least once a year, or maybe every 6 months, I strip all the indicators off my chart. I basically, so all I have is price action. That's it.
What
No,
about volume? Not even
no
volume?
volume, not no volume whatsoever. Just
Oh,
price
okay.
action. That's all I'm looking at. And then because part of my system is established utilizing candlesticks, and I
Mhm,
understand the candlesticks so well and know what they, and also I don't follow all like 240 plus candlesticks that are out there. I cover a handful. I have four for the upside, four for the downside. That's all the candlesticks I look for.
mhm.
So by removing everything off my chart, I would definitely be able to survive and thrive because of how I utilize the candlesticks.
Hmm.
Now,
Good. So,
and what's that?
yeah, no, I was just going to say, then why bother having the indicators at all?
Because the indicators, I have to evaluate my indicators. How much value does it add when I add them in? In
Mhm,
other words, do I increase, does it help increase my probability and my understanding of what's going on with price action? That's why I like one momentum indicator. I use
mhm,
the true strength index, uh, and then my moving averages. Because
mhm.
moving averages are dynamic levels of support and resistance that, for whatever reason, price tends to obey. Like if
Ah, all
price
right.
action is above the moving averages, those moving averages tend to then become dynamic support that will
Mhm.
support pullbacks. If price
Mhm.
action is below those moving averages, then those moving averages turn into a ceiling, and price action will move up to it and then reject it and fall back down. So it just gives me a little bit of extra information. But I've seen some folks who have their charts set up where they have 4 and 5 momentum indicators that are telling them the same thing. That just leads
Mm.
to confusion.
Yeah.
So
Yeah, I agree with that. And it correct me if I'm wrong, but it kind of sounds like you have a full toolbox, but it's a matter of, well, I don't need to necessarily take out every tool from the toolbox on every single trade. They're there, and when I'm seeing the trade develop, then I could see, well, which tool do I want to pull out? Is it a hammer? Is it a screwdriver? Is it
yeah,
something else?
yeah. Then no, that's a fair analogy. I mean, I have my basic three tools that
Hmm.
are going to tell me where support and resistance is, and it's going to tell me where momentum is, and then the candlesticks to tell me, what the personality of the move currently is, what the traders are doing, and so
Hmm.
those are my three main go to things that I utilize on my chart that help make up my edge, and so then I typically don't add much to that. In other words, like I don't have the TSI along with MACD because
Hmm.
oftentimes they tell me the same thing. I don't have TSI with RSI because they basically tell me the same thing. And so that, what about you? How do you handle those things, Mike?
I
On
just
either
take
on your charts or or what specifically, like on this question was, is your system your edge? Um, you know, is your system your edge, or as we start, get ready to go into about building the confidence of consistency, is your system your edge?
hmm. The way that I look at markets is that I'm trying to build a puzzle, or and I know what puzzle pieces I need to have in place in order to see the full picture.
Okay.
And I'm not going to tell you what I see until I've put each of the pieces of the puzzle together.
Okay.
In my mind, that helps me to build the edge. And the reason why is because what I've found that I've done previously and what I've seen other people do previously is that they'll pick up one puzzle piece or maybe even two or three and start to jump the gun and say, "Oh, I know what we're looking at here. We're looking at a bunny." Hey, but meanwhile, yeah, you fit the pieces of the puzzle together, and you might be looking at something completely different.
Okay, sure.
And that's where I feel my edge is. And the way that I'm doing this for the market, I want to look at the market through three primary lenses. Yeah, you heard me mention them before, but looking at what the general market is doing, looking
Right.
at what my system is doing, and then taking a look at what my personal performance is doing. And when I've got each of those three buckets filled, then I'm able to say, okay, here's where we're at. And my edge comes from having each one of those buckets filled before I come to a full conclusion.
Cool. So, yeah, Douglas said it said himself. He says the best traders have developed an edge, and they trust it without hesitation or reservation. That's strong words. So,
Mm.
many traders chase, confidence and wait to feel ready before they act. And so Douglas actually flipped the script on this. He said consistency builds confidence, not the
Mm.
reverse. In other words, so so do you skip valid trades because you're not 100% sure?
No, no. If it's a valid trade, then I'm going in.
You're going in every
Yeah,
time.
yeah,
Come on now,
yeah.
every time. Okay.
If it's a trade in my system, then yeah, then my system's broken if I don't take it.
So, did you ever have a time in your training though that where you did chase the feelings?
Oh, sure. I think that we've all have been there. I think
Yeah.
that that's part of the trading journey.
Okay.
But no, where I'm at right now, if a if a high probability, high reward, low risk trade crosses my screen, then it's my job to take that trade.
Okay. Well, it's kind of like what I did this morning with the micro strategy, is that
Right.
it is basically it appears as if it's going to meet my criteria.
Hmm.
However, I was able to take my criteria, apply it to the actual price action, and if it's within, it's really cool to be able to define your criteria on the chart with and put dollar figures on it. Okay, here's the
Hmm.
price where my criteria will be met, and then think about the freedom it gives me because now I can be on doing a podcast with you and having a lot of fun, right?
Hmm.
And
Right.
I don't have to worry about the trade because the trade's taken care of itself.
Mhm.
And that's what I love about doing conditional orders. They can set you free. So
Yeah. Same here.
chasing a feeling.
But yeah,
What would happen?
so the one final point on if the trade shows up, should you take it or not? I just glanced over and I had my buddy Ted Williams sitting on my
Okay.
desk over here. So if a
Yeah.
trade shows up in that happy zone, he's supposed to swing, right?
Okay.
Because that's what's going to give him the high batting average. Now, if a pitch shows up there and he doesn't swing, then he's not doing his job.
Good
Right.
point.
And whenever the pitch comes over the happy zone, and it's up to us to figure out, well, what's your happy zone? Those are the trades that you're supposed to be swinging at. And you're also supposed and by knowing where your happy zone is, you also know where it's not. So if something's over here, then you're not going to be swinging at those. For me, that would be like a low probability trade or a maybe a high reward, high risk trade.
Okay.
I don't like taking a high reward, but also high risk.
Yeah.
We've had
And
a
what?
lot of those recently with earnings being in the middle of earnings season.
Oh gosh, yeah. Gosh, yeah. And
So,
the other
those
thing,
I don't trade.
for me personally, uh,
Hmm.
I love the can slim approach to selecting stocks and all that kind of stuff. Um, at the same time, though, I'm not a breakout trader. I do
Hmm.
not like trading breakouts because to me, uh, the my personality is such that 70+% of breakouts actually break out and then pull back, right?
Yep.
So, and I know that. So, um, I started becoming a pullback trader because of that factor. Okay, that's a probabilistic way of approaching. I know if 70+% pullback, so heavens, I'll just wait for the pullback after the breakout. Now,
Mhm.
now I accept breakouts; they're really cool, but I don't chase them.
Mhm.
I don't trade them because one, unfortunately, it's I don't like the angst which is the feeling that goes along with buying at a high and then let it suck back to another, let it drop down to 2, 3, 4, even sometimes more percent. Because I'm going, Dad gummit, because I want prices to go up more quickly, and so that's why I turned into a pullback trader for myself, and because and that's what helped me develop both confidence in myself and confidence in my system that it would provide consistency
Mhm.
because I think a pullback to the 8-day moving average, or let's say the 20-day moving average, and a rebound off of that is almost a higher probability trade than taking the breakout trade. Again,
Mhm.
that's what I've experienced in my trade. And how about, um, how do you build your confidence? What helped you build your confidence in your consistency, Mike?
Experience.
Okay.
The taking trades, getting hit on the chin, uh, taking more trades, and yeah, it's the experience, it's the grind, and it's uh, if I could give my younger self some advice, it would be to not be trading with my full bag before getting involved, meaning that I don't need to take all the money that I plan to invest with and start training on that. If I
Right
would
on.
have just taken a much smaller amount, then I would have been more comfortable uh, with having an understanding that I'm trying to test and learn versus I'm trying to make money right away.
Mm,
Also, if I would have taken paper trades back then, I felt like, oh, you know what, this is a waste of time. Well, why did I feel it was a waste of time? Because I wanted to be making money right away. But it's hard to
sure.
make money when you don't know what you're doing. So,
Exactly.
uh, if I could give my younger self some advice, it would be to paper trade. It would be to trade with a much smaller amount than what you have until you start to gain confidence, until you start to gain experience. And then once you have those things in place and you start to have those wins under your belt, then you could start thinking about stepping up your size, but not before.
No, I agree with that wholeheartedly. And you mentioned, um, if I could tell my younger self a couple of things, there's a couple of things I'd love to tell my younger self also, and when it comes to trading, is that it would be to have a trading account, but then have an investment account also for longer
Mm.
term,
Oh,
and
yeah.
and and
Good idea.
and and basically have similar rules, but the rules on the investment account would keep me in longer to let those things grow
Mm.
in those areas there, and then keep feeding the kitty. What I mean by that
Mm.
is um, after I left corporate America and left my military career. Uh, okay, I started trading for a living. So my thought was, well, I have to generate income, bum, 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 bum.
Mhm.
And what I failed to do was say, oh, I need to still be putting, $100, $200, $300, $500 a month into my investment account to let that continue growing. Because
Mm.
sometimes there's that temptation, and there's a big mistake, guys. I'm gonna talk through the camera and just look at whoever's listening out there. The big mistake I made in blowing up some of my account is because my process was not good. I was not trading with an edge. what happened is that I stole money from my investment account and put it in my trading account. And guess
Mm,
what? If you're not following a great system and not, and because I would shoot from the hip and I was just a gunslinger, guess what? That money was blown up and taken away. And so fortunately, we've put it back together and rebuilt it. But you talk about a painful experience of trying to explain to your wife, "Hey, sweetie, I just lost six figures." That I don't want anybody to have to go through that. And so, that's where the process, the system, and understanding the difference between a system and a strategy, and then building consistent, becoming a consistent winner, and now also recognizing that there's a certain part of your portfolio you don't touch. You put a big X on it. You keep building it, but you don't touch it because that's paying for your future. So
mm.
anyway, okay, sermon is over, but I hope that touched somebody out there who needed to hear that. If you did, hey, just put a Y down in the comments and say, "Yeah, go preach it, Dennis," or whatever. No. So, what about emotions? Emotions must be eliminated. The common belief if I could just stop feeling, I'd trade better. Um, and Douglas would say to that, feel emotions, but act independently of it. That's a big nut to crack. I mean, could this be one of the places where Mark may have made it sound easier than it is to basically understand your emotions?
Yeah, I don't think that if it's uh, easier, if it's one of those things that's easier said than done, but I think that understanding the emotion is the important thing. Because if we be like, oh, I want to eliminate emotions, then that's taking it. You're making the assumption that the emotion is the problem, or the emotion is bad. The
Yeah.
emotion might be trying to protect you from something. So isn't it better to figure out, well, what's this thing trying to protect me from? It could be trying to protect you from something very good. I had a conversation with my daughter the other day, and uh, I asked her, like if there was your favorite thing, like, well, what would be something that you really want right now, right? And she listed off that she wanted this makeup kit from Sephora. She's 10 years old. She wants this makeup kit from Sephora.
And how old is
Just
how old how
yeah,
old's Lily?
she's 10 years old. Well, like I don't know why she's thinking about this kind of stuff, but just like,
Well,
okay, so this makeup kit, it's sitting right across the street. All you have to do is just walk over and get it. Would you do that? Sure, of course I would. Okay, well, what if we blindfolded you? And told you to go walk across the street? Would you still go? Well, no. Well, why not? All you have to do is walk across the street and get it. Well, I'd get hit by a car. Well, yeah. See, so in that case, fear is a good thing, right? And then she started to understand that. Oh, yeah. Well, when I'm afraid, because she had this idea that she wanted to be brave, right?
mm,
And being brave means that I'm going to feel fear and do whatever it is anyway. But I had to try to explain to her with this example that sometimes our fears are a good thing. They're protecting us from things. So it's not is the fear inherently a bad thing. We need to question, well, what's this fear trying to keep us from doing?
yeah,
What
yeah,
does it get us into? What does it get us out of?
yeah. Well,
And I think
at some
that's what
point
we
you need,
need to ask ourselves.
and at some point you need to ask yourself, or have a talk with yourself about, is this a legitimate fear? Is it really protecting me, or is it the fear of just the fear of the unknown? What's that, false evidence appearing real or something like that? Um,
Right, right.
because oftentimes many of the fears people spend so much time on being afraid of basically never come to fruition. And so, and that's one of the places, guys, if you're out there and if you haven't read Mike's book, the Trading Mind Wheel, I tell you, let me focus. Where is that? There we go. He gives some absolutely fantastic questions how to dissect some of these things to help you basically master your trading. So Mike, well done with that.
Yeah,
And
appreciate
that's why
the
I
talk. Thank
love
you.
that's why I love getting to talk with you, because I know you bring that to the table. And so um, so let's see. Are you okay? When a person, let's say we have somebody who comes to us, and somebody out there may be listening, and they're totally, trying to avoid that emotions, and they're trying to like kind of go numb, uh, because discipline is an emotional neutrality in action, not numbness. And I really like that statement. Some of the Medal of Honor winners, in combat, they're awarded for their bravery, and often people would make the mistake of assuming that being brave is the absence of fear. But in most cases, almost every case, they were afraid, to step out and but do extraordinary things. And let's face it, you're sitting there trading. What's the maybe asking yourself, what's the worst thing that can happen to me? If this if this trade goes wrong, and it would help get that aspect of emotion more in check. What's the worst thing can happen to me? And so, for me at least, that gets back to trading my system. And for me, I know, and this gives me just a good feeling, is that I know worst case scenario is that I'm going to lose 5 to 8%. Worst case scenario. And so with that allows me to basically, if I can pre-accept the outcome, that definitely reduces the level of emotions that I have to go through, because my mind is already made up. Does that make
Right.
sense?
That makes sense. I think that actually trading routines can help well when it comes to discipline. So,
Okay.
well, people tend to think of a trading routine as, oh, well, here I'm doing my prep work, and here I'm planning my trade, and that's my trading routine. And I think that that's part of the trading routine. But the part of the
Okay.
here's another element to a trading routine that I think can really help people. When you start to practice, right? So if you're, let's say that you go through and you're doing your simulated trades, and you're like,
Sure.
okay, I'm entering here and here's how the trade is progressing and I'm supposed to sell here. And you go through that kind of an exercise of how you're managing the trade, and you do that 100 times, then
Okay.
that's starting to build in that routine part where, yeah, like, all right, the trade went up here. I know that I'm supposed to sell. And then you just click the button and you're training yourself, right? So then you're building a habit, you're building that discipline muscle by saying that, okay, price went up to, I don't know, 10% or twice your risk, let's just say. And now I'm creating this routine in myself to click that button to sell. And I'm doing this in this simulator environment. Then in real time, because you've built that muscle in the simulator, now all of a sudden it becomes more natural to say up 10%, up twice my risk, or whatever it is for you, click the button, versus you get up there and you start thinking, oh man, could this really go much higher? Well, what do all the rules on my paper say? And you're figuring, no, that the routine part is up, it's up there, click the button, and you're not even thinking about it because it's become so routine for you
Yeah.
to take that profit.
Spot
And
on.
that's one example.
So yeah, and that's a perfect, that's a great example, because oftentimes I think that from, especially beginning traders, they can create their own deer in the headlight moments
Yeah.
because they haven't pre-decided and haven't pre-practiced what they're going to do in certain circumstances. And so they get into the environment, and I can remember this so well back when I was first trading, is is I would check the price, check what things were doing on my phone, and let's say I'm up 10 or 15%, and instead
Mhm.
of just saying, "Hey, I can take some profits off the table right now," boom, I'd say, "Oh, I know it's going to go higher, and I know it's going to go higher," and so then I would basically then wait, and guess what? The oftentimes when I would wait, the profits would evaporate. Yeah, and because as price action has a way of doing. Reminds me of one time I was flying to Los Angeles from Hawaii, and I checked the back in the day I was trading with Fidelity, um,
Okay.
and I got on my phone and I checked the value of this one particular investment. I was up $10,000, right? And I'm going, oh,
All
right,
right.
this is great. By the time I get to LA, it's going to be 20. Well, instead of
Change your
learning
first
my
class.
lesson, yeah, I go, yeah, I upgraded my flight immediately. No, I didn't upgrade the flight, but I said, okay, this is really cool, and I jumped on the airplane. I said, this, I've been waiting for this. Is my boat has come in, my ship has come
Mhm.
in. I get to LA, and whatever the hype was that was driving the price up was basically rescinded, and all of a sudden I'm down, and I'm going,
Mm.
just I was just cussing at myself, and calling myself all kinds of bad names that definitely didn't help my self image as a trader. But it was times like that, those things hitting me right between the eyes, that formulated my, hey, I don't have to, it's okay to sell half a part of a position. If it's, you don't have to hold on to the whole thing, but take some profits off the table. And that's one of the things that I coach Mike a lot on is teach yourself how to be a winner. And and part of that is, let's get in a habit of winning. And that's in a situation like that, like you said, if you're carrying a 2-to-1 reward risk, once in your risk is 5%, you are doing yourself a disservice if you don't take profits at 10%, at
Yeah.
least some profits. And now it may go up, 30% from there, and that's okay because you also have made a decision about that. So, I think in dealing with emotions, Mark Douglas said, before you sit down to trade, ask, am I am I willing to give myself money today? And this, reveals where you're at emotionally aligned, and are you setting yourself up to self-sabotage what's going on?
Mhm.
So anyway, so what would help you most right now? Now I'm talking to all the folks out there, and you can leave something in the chat, or send us a note on YouTube or over on the Spotify. But the question I have for you: what would help you most that right now that Mike and I could help you with? If we had a webinar, Mike and I did a webinar where you can, or a live Q&A, would that help? But we need your feedback. Please help us out with this, because we want to basically, help traders of all levels become better traders. And so your call to action is this: is drop it in the comments, or DM us, or email us, and let us know, how can
Mhm.
we better provide something. And do you have any ideas on that, Mike? How we could maybe provide some
Well, yeah,
other. Go ahead.
yeah. I've got one idea. Forget about helping everybody, right? Like, if you're listening to this, how can we help you specifically, right? Like,
Amen.
don't worry about something that's going to be so big that it helps everybody. Like, what kind of help do you need? Because we want to
Right
help
on.
you.
Yeah. But the thing about it is It starts by you putting your hands on the keyboard and typing it into the comments section so
Mm,
we know about it. Okay.
mm,
And so the, as we build up, and, here's where we have gotten to is, um, belief alone creates, there's a myth that belief alone, if I believe hard enough, you hit on it right off the bat, Mike, and when we first got started, belief alone creates results. And the fact of the matter is Mark Douglas in his book, he talks about um, the 7 reasons I am a consistent winner. The 7 reasons I am a consistent winner, and I just read them off really quickly here, is 1, I objectively identify my edge. I predefine the risk on every
mm.
trade. I completely accept the risk, and I'm willing to let it go. I act on my edges without reservations or hesitations. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and I never violate them. And so, you know, Mark Douglas said, if you don't, if you don't need to know what's going to happen next in order to make money. And so, is that a big hangup for people? They basically want to try so hard to predict what's going to happen next that that either one freezes them so they don't take action at all, or two, um, that overwhelming emotional desire to make money causes them to go outside their rules, go outside of what makes them a winning trader.
Yeah, it's an important mindset shift from thinking in terms of prediction to probabilities. And people will try to make the argument that, like, even in playing cards, right? Like you're playing blackjack, being able to predict, well, what card is going to come out, right? Like you could have like card counters and like, oh well, it's a probability, but there's more of an edge here, so I could sort of predict what's going to happen. I think that in trading, especially when you have so much money online or you want to be making more money, that you begin to rely more on the ability to predict than the ability to manage risk. I think that it's in our ability to manage risk that we're able to really grow an account and reap some rewards from there.
Okay.
It's it's less sexy to be a risk manager than it is to be the predictions guy, you know?
Yeah.
So maybe perhaps that's part of the problem.
So yeah. Well, how is, like you said, there's the prediction. How is understanding the probability of a particular trade, the probabilities, and making a prediction, how are those different?
Well, it's different because you know what a good hand looks like, right? So,
Okay.
like if we're playing cards, uh, you know what gives you a better chance to win, right?
Okay.
If you're looking at the market, we line up all these things and we do all this analysis to figure out what's going to put us in the best position to win. But we're not trying to predict where prices is headed.
Okay.
We're giving ourselves the best opportunity to win, and then it's managing the downside.
Hmm. Okay. So in other words, managing the downside is the I think that, and I agree with you wholeheartedly, is I think managing the downside knowing how to do that, the upside takes care of itself. In other words, if I'm making an A plus setup and I'm consistently taking that trade on an A plus setup, and I just automatically put in, okay, here's the limitations on my risk,
Mhm.
then what happens from there, of course, is totally outside of my control. But I know that if it's an A plus setup, that the probability of it being successful is, let's say, better than 55%. Um,
Mhm.
and I can look at the chart and say, okay, here's where it's likely to enter resistance. So this is probably how far I'm not predicting. I'm basically using the probabilities of and understanding the probabilities of, if this turns around the way it typically does with an A plus setup, then this area is where I am likely to run into resistance, because I know from my study and my background, my experience, that that's where there's a pocket of sellers that are going to basically just start getting out of their and so that's where I want to be, jumping out of the trade or taking some profits off the table. And again, it's not a prediction. It's just that
Mhm.
we can identify. It's like a map. We can
Mhm.
identify enemy territory on the map, and we can identify friendly territory on the map. And for
Mhm.
me particularly, my friendly territory is where I get a pullback into the moving averages, and
Mhm.
because that's my high probability low risk area to enter the trade. I
Mhm.
know that enemy territory is areas where there are pockets of people who dissatisfied, traders who bought at the wrong time, and they're wanting to sell. So I know that designates enemy territory. And so it's this seesaw battle. And then once all those dissatisfied, traders who aren't following the rules, who don't have an edge because they let their emotions govern where they got in, is once those guys are all gone, then that you get your breakout and you start moving on up from there. And then
Mhm.
that level turns into friendly territory, because that's where you're going to find support. So and so I think for me that's the way I look at it when I look at a chart. I think of it as kind of like being a map, a
Yeah.
battle map, if you will.
Yeah, I think that that's a great way to look at it. Like, well, when I'm looking at a chart, I'm trying to see, well, what's the pattern, right? Like, is this a
Yep.
high probability trade? Yes or no? And so I have a few different ways that I'm going about figuring out, is this high probability, including the pattern and the analysis of that pattern across a few different time frames. Then I'm trying to figure out, is this high reward, low risk? And I think that that's where some people try to think of that part as the, oh, well, you're predicting that it's going to go to a certain profit target, right? And I could see how that why people might think that, but I'm looking at it as more as, is there some reason why price might not be able to get to where my profit target is? My
Yeah.
profit targets are based on history, right? Like, so there's a lot of different ways that we can figure out certain price targets. I look at history. So is there a reason why price can get to 20%, let's say? Yes or no? And then I'll take a look at the chart and I'll be able to see, well, there's some resistance levels, like you mentioned before, where a price might hit its head before it gets to
Yep.
that. Then it's like, oh, well, maybe this isn't high reward. Maybe this is medium reward, because it might hit its head before it can get to that 20%. So then the reward part becomes part of the criteria of, will I take this or not? Because if
Yeah.
I looked at the pattern and it's a high probability pattern, but I see, oh, this actually isn't high reward. It's only medium reward. Great. Table that one onto the next trade. And then I find that all right, high probability, high reward. What's the risk? And then I start to look at, well, where's the floor on the chart, right? And I've got a few different ways that I'm looking for that. And if the floor is good and I've got high probability, high reward, low risk, then that's the ideal situation where I should be taking the trade.
Yeah. And oftentimes if people aren't ready to take the trade, let's say they're not using conditional orders down close to levels of support for its high probability, low risk, what they'll do is they'll start chasing the price action as it goes on up, not realizing that as they chase the price going up, they're reducing the probability of it being a successful trade and increasing the risk.
And you're also reducing the reward too. You just took the whole thing and flipped it on its head.
Yeah, because and then you need to ask yourself the questions and figure it out. I mean, it's a math problem, guys. You get your little tablet and you figure it out. And if my system is based on taking a 2-to-1 reward risk or better, and I'm looking at a 1-to-1 reward risk, then that's a setup and a trade I should totally pass on and just go, this is not for me. So did Mark Douglas lie about the edge? Now, I'm gonna say no, he did not. However, I think we can, in the way we traders interpret things, we can lie to ourselves about the edge. And so I think that's a lot of what's happened. And so what about you, Mike? Did Mark Douglas lie about the edge?
Ditto.
Ditto.
You took the words right out of my mouth. Sometimes we lie to ourselves. I was thinking the exact same thing. I think that we've been doing this show together for too long.
We're not totally completing each other's sentences yet. And so, and one of the quotes from Mark Douglas's book says, "An edge is nothing more than an indication." And if you're taking notes, write this down. An edge is nothing more than an indication of a higher probability of one thing happening over another. And so, thinking in probabilities is a mindset. It's a framework for understanding how to operate in an environment where you have no control. And so hopefully, again, folks, let us know what you would like to see us do in the future. And also, if we put on a special webinar, would you attend? And so, guys, track just give us some questions and answers about track whether you are not. Here's some action items you can do: is track whether or not you are following your rules, not just if the trade works out. And so that's a great thing for tracking. Did you follow your rules, and not just track did it turn out? And so, and I'll ask you one last question, Mike. And because we want everybody, if you want structure and support that builds real consistency, go to marawealth.com or autopilottraders.com. The links will be down in the descriptions. But of those 7 items, Mike, that were in Mark Douglas's belief system for becoming a consistent winner, which one of them stuck out to you the most?
I never violate them. Number 7.
Oh, number 7. I love that. And I have to go with number 1, is that because listen to what number 1 says. I objectively identify he doesn't say edge, he says edges. So could there be actually not just a single edge, but multiple edges in the system that we trade? And I'll leave you guys with that question. So, Mike, as again, always a pleasure. I'll say aloha and God bless.
Same. All
And
right.
so
Take care, everybody.
we'll
Thanks for being
we'll
with
see you
us
next
today.
week.
All right. Bye.